Hi, this is Justin Miller with the Chong Miller Group. It's the beginning of January 2019, and I thought I would check in with you and give you a little bit of a market update. I know that some people have become really concerned that the market is slowing down, and here in Las Vegas, a lot of you have experience or you know people who've had experience with very significant struggles in the housing market. And so I want to talk to you as to what this slowdown is and what it may mean. So the first thing, let me give you some statistics. It is true the market has slowed a little bit from where we were in the summer of 2018. So in the summer of 2018, prices were peaking at $300,000. This is for single family homes in the area covered by the Greater Las Vegas Association of Realtors. That's Clark County plus a little bit around the edges of Clark County. Now, some people were predicting earlier in 2018, that prices were actually going to overtake what they had during the bubble years in 2006. We didn't get there. It was pretty clear actually to those of us who were paying attention to the larger macroeconomic issues that that was not going to take place in 2018 because the housing market tends not to respond as other markets. The housing market's a very illiquid market, meaning it takes a while to convert properties into cash or to convert cash into properties. And so the housing market doesn't go up or down the same way the stock market does. So what we were seeing housing markets peak, and since that time they have plateaued. And in December 2018, the plateau was $296,250. That's what the median sales price was in December 2018. So that's a drop of $3,750, right? That's 1%. That doesn't have any statistical bearing on anything of great significance. It means that the market has plateaued. It's not going up right now. We also saw in the summer of 2018 days on market down to 11. Again, that's a median number, and what median means is that half of houses are going more quickly and half of houses are taking longer. It doesn't mean that your house, if you put it up for sale, is going to sell in 11 days. It also doesn't mean that everybody or the average person's house sells in 11 days. Rather, it means that half are selling more quickly and half are selling longer. The December 2018 figure for that was 25 days. Right. So if your place was priced properly, it was marketed properly, you could get into the market and within a month you would be selling, and you'd be selling at approximately 98.5% of list price, again as a median number. Now, just to give you a comparison, housing prices peaked in in Las Vegas in June of 2006. The peak price was $314,600, median price, right? We've not yet attained that price. Some people have been writing that Las Vegas has now become very overvalued because prices were going up very quickly. The reality is, if you look at Los Angeles, San Francisco, Long Beach, San Diego, New York City, Boston, places in Texas, etc., most of the rest of the country, prices have actually reattained the peak levels that they'd hit in 2006. We're not there. And in fact, if you look at the inflation adjusted price for housing, we're not nearly there. The inflation adjusted price for the peak housing median price in Las Vegas was $391,000. That's almost $100,000 above the current price on the median house in Las Vegas. We've got a long ways to go to get to housing unaffordability like we were experiencing here in Las Vegas in 2006. People who are yelling and screaming that, hey, houses has become too unaffordable here, they're going to crash. They just want to make a lot of noise so they can get themselves on television. They're not actually saying anything of great urgency. They're not saying anything that's particularly relevant to the way in which the housing market actually works. The housing market tends to go up sometimes very quickly, and then plateau. It then goes up and plateaus. The housing market tends not to go down. It may regionally, you may find, such as in the Northeast and Steel Belt areas, housing prices drop because the employment base is dropping. The employment base isn't dropping here in Las Vegas. The economy is growing by approximately 60,000 people per year. Those people are moving in from other places, right? They're new residents in Las Vegas, so they're inherently, definitionally having to come from other places. And many of them are coming from California, where housing prices are higher, where they may be seeking to escape state and local income taxes. They may be coming from Arizona. They may be coming from a place like Texas, which doesn't have the taxes, but where they are arriving here either for jobs or for retirement, and they're needing a place to live. And so they're buying. And home sales haven't been dropping off. Again, we've got days on market increasing just slightly from 11 to 25, but it means that sales are taking place. In fact, I can tell you as well, the inventory is increasing a little bit because the supply on the market is taking a little bit longer to clear, and other sellers are putting their place on the market. So in June, at the bottom of the inventory for this cycle, inventory was a little over 5,100 days, 5,132 homes on the market at any particular day in June of 2018. That's increased. That number now at the end of December is 6,847, right? And it's mostly because new homes are coming into the market for sale and houses in the market are taking a little longer. What that really means is if you're a buyer, now's a great time to be home shopping. You've got a little more selection, and tight inventory has been one of the real problems over this past cycle. You've got more selection to look at, and you've got the ability to sit back and take a little bit more time and think seriously about what you want as opposed to making a reactive decision about pricing because houses are moving a little more slowly. On the other hand, if you're a seller, it's a great time to be in the market trying to sell your home. You've got to price accordingly. If you're not in this market, you're going to be sitting on the market for a lot longer and you're going to have to be making price cuts. But if you're priced accordingly, the average days on market, the median is still 25, and the median is still selling at 98.5% of list. So it's a perfectly fine time to be in the market as a seller, as a buyer. Home sales continue in Las Vegas. The likelihood of them plummeting off the cliff, incredibly remote. As many of you know, I did my PhD at NYU at the Stern Business School in entrepreneurial finance. One of my colleagues who was doing her PhD at the same time, she's a professor at Wharton now, she was studying the housing market, and she found that over the entire history of the housing market in the US, the financial crisis starting in late 2006 through 2011 is unique in terms of its footprint on the housing market. Housing prices obviously dropped. They dropped a great deal. Here in Las Vegas, they dropped by 63% almost from the peak to the trough. They've come up since then, again, not reattaining the peak here. But what she found in her research was that even during the Great Depression and during the 1930s, housing prices dropped by not more than 10 or 15% across most of the markets in the US. So our recent experience here, a dozen years ago now in Las Vegas, is unique. It's not something to be fearful of. It's not something that's going to be repeating. So this has been Justin Miller with the Chong Miller Group. Please check out our website, www.chongmillergroup.com. And feel free to email us or call with any questions you have. We would love to help you in your real estate adventure. Thank you.